With Tesla's stock price surging in recent years, many investors have been wondering if the company's stock could be the key to their early retirement. This video will explain how much Tesla stock you'll need to retire by 2025 and examine the potential risks and rewards of investing in this electric vehicle giant. If you're dreaming of an early retirement and want to know if investing in Tesla can make your dream a reality, look no further because we've got you covered. So I want to ask you to first crush that like so. Grab your notepads and pens and get ready to see how Tesla might help you reach your financial goals. And subscribe button. Did you know that if you own a certain number of shares of Tesla stock, you might be able to coast into early retirement in 2025? It's no secret that many people see Tesla as a way to retire sooner. Those who are interested in this idea should follow the company's progress to find out how Tesla might help them accomplish their goals. To find out how much Tesla stock you'll need to retire by 2025, watch the video below. Whether the firm's stock is overvalued or undervalued is still a point of contention between Tesla supporters and skeptics. In reality, Tesla has partnered with other businesses to increase output and clientele. Morgan Stanley and Adam Jonas, a worldwide director of research for shared mobility and autos, have high praise for the Tesla 2. Stanley raised its price forecast for Tesla shares from $1,200 to $1,300 due to the $2 million delivery estimates for this year. Morgan Stanley analyst Adam Jonas has been a longtime follower of Tesla and has generally been optimistic about the company and its growth prospects. But he has also voiced concerns regarding the company's valuation and the possibility of more competition in the electric vehicle market. Goldman Sachs analyst Noel B. Delaney has also been generally optimistic about Tesla. In a research note from February 2021, he increased his price target for the company from $780 to $860, citing the company's robust demand and the possibility of greater adoption of electric vehicles as justifications. Credit Suisse analyst Dan Levy has a more cautious outlook on Tesla. In a research note from February 2021, he downgraded his rating on the stock from neutral to underperform because he was worried about the company's valuation and the possibility of more competition. Despite this, he noted that Tesla is a market leader in electric vehicles and has a strong brand that could help it weather any challenges. Target from 1,125 asserts that the stock's recent decline is a great time to buy. According to Levy, Tesla should outperform Wall Street's forecasts. Even well-known American stock picker Cathie Wood predicted that Tesla will reach $3,000 in value by 2025. Who is the founder, CEO, and CIO of ArcInvest, a $60 billion business that invests in technologies like genomics and self-driving cars? Despite the fact that one analyst predicted that Tesla's stock will reach over $2,500 by 2025, the stock price of the leading EV manufacturer is expected to rise in response to higher sales. And if this forecast is correct, Tesla stockholders may see a significant return on their investment by 2027. Therefore, this prediction shouldn't be completely written off because it was based on a thorough analysis of the EV company's historical market performance and projected future growth. The benefit of Tesla. There are solid grounds for optimism. In sharp contrast to the traditional auto industry model, where the product remains the same throughout ownership, because Tesla cars have fewer parts, Tesla's approach to car construction involves developing software on unique hardware. Much like Apple makes the iPhone or Microsoft uses Intel chips and Dell PCS, this allows Tesla to continuously improve his car's software functionality every few weeks. Because they don't require expensive oil changes, their total cost of ownership is substantially cheaper than that of internal combustion vehicles, muffler replacements, or tune-ups, compared to conventional internal combustion vehicles, which are thought to have 2,000 parts per vehicle. Traditional manufacturers are aware of this since a substantial amount of their income come from their service companies. With only about 20 parts per vehicle, Tesla's battery-powered cars are far simpler. From a marketing standpoint, Tesla has a distinct advantage in some areas. For example, who wouldn't want to own a car that produces no emissions, eliminates trips to gas stations, and is environmentally friendly? Additionally, Tesla has acquired battery manufacturing companies and plans to integrate innovative battery-related technologies into its vehicles, which could further lower the cost of ownership. However, other automakers are also trying to acquire electric battery expertise, which will still be lagging behind in this expanding market. For the foreseeable future rival, manufacturers will probably find it difficult to catch up and level the playing field on this front. While traditional automakers will be releasing more electric vehicles in 2020, these models may not be software cars, but rather traditional cars that have been retrofitted with electric motors. Of course, there are security risks associated with software cars, just like with any connected device, but Tesla could solidify its position as a leader by showcasing how to effectively manage these risks. But what are your thoughts? How do you feel about making an investment in Tesla? Nobody can genuinely say they don't look forward to retiring, but most people are unaware that in order to do so comfortably, they will require a solid financial foundation based on profitable. For example, investing in growth firms could be rewarding if you buy them at a high enough price. Tesla is working to demonstrate its accomplishments to both investors and detractors in order to meet the high standards set by investors. The company plans to use the funds acquired to build sports cars and affordable cars, among other things. Despite having much lower margins than revenue from robot taxi services, ARK Investment asserts that the company has been creating useful AI solutions and unveiled the Optimus humanoid robot on AI. By 2026, it is anticipated that Tesla's robot taxi business will contribute 60% of its estimated value and generate more than half of the company's EBITDA. According to their prediction, 57% of the company's entire revenue throughout the simulation set will come from electric vehicles by 2026. According to annuity.org, Tesla has arguably made a reputation for itself in the market by this point, and even with the drop, its performance suggests that the EV company will continue to do well. As devoted Tesla owners, many Tesla bulls aspire to retire rich and support the company's mission to create a cleaner, more ecologically friendly world. Given that the median retirement income in the United States is approximately $47,000, it might one day offer a suitable retirement alternative. In certain places, you'll need at least $4,100 per month on average to retire comfortably. $4,100 a month can be sufficient to pay for necessities like rent or a mortgage, transportation, utilities, groceries, and how much will you need? Though the precise breakdown of expenses will vary based on individual circumstances, $4,100 per month may not be enough to cover all expenses in other areas or for those with more expensive tastes or hobbies. Assuming an average cost of living in the United States, $4,100 per month could cover rent or mortgage payments, utilities, groceries, transportation, and some entertainment or leisure activities. Because of arbitrage, which allows Americans to make their retirement assets go much farther in countries like Panama, it's crucial to establish a budget based on your personal expenses and income to see how far $4,100 per month can go for you. In Mexico, Costa Rica, if you plan to retire in 2030, but need at least $4,000 per month in retirement income and want to remain in your current country, you will need retirement savings of at least $1 million. Many Americans are choosing to spend their golden years in Portugal and even Thailand. You will need at least $50,000 in savings adjusted for inflation using a typical 5% withdrawal rate. The best investment you can make right now is probably buying Tesla shares if your financial goal is to retire from work by 2030. This is great news because if the company continues to be successful, Tesla shares will increase in value over time, meaning that even if you continue to spend 5% of your retirement savings year, they will last for a very long time. In the end, this dates back to November 2nd, 2016, when Tesla was only trading at roughly $38 per share as a result of the stock rising from 5.74 cents to 12.29 throughout the years. In comparison to a return of 35.7-40% from a comparable investment in the S&P 500, an investment of $1 in Tesla made in November 2011 would be worth around $24,000 today, representing a return of almost 20,000%. What do you think of this comment below? Please let us know once again. Please hit the like button, subscribe to our channel. We hope to see you in our next films.